Some days in the market are pretty quiet. Others can feel like a roller coaster. And then there are days like January 12th, 2026, a day that saw this absolutely gut-wrenching plunge followed by a breathtaking recovery. And it all pivoted on a single moment. So let's dive into this and really unpack one of the wildest trading sessions we've seen in a while to understand what drove the fear, what sparked the rally, and what it all means for you.
To really get the panic at the opening bell, we have to rewind just a little bit. See, this wasn't just one bad morning out of the blue. The market was already seriously on edge. Get this. In just the 6 trading days before this one, a staggering 18.5 lakh crore of investor wealth had just vanished. That kind of loss creates some real fear, and it set a deeply negative tone before the market even opened.
So when the market opened that Monday, it wasn't a fresh start. Nope. It was more like pouring fuel on a fire. The selling pressure that had been building for over a week just got more intense, feeding on all that fear and uncertainty gripping investors. The big question on everyone's mind was, where's the bottom? All right, so the first part of our story is kind of like a classic market mystery. What specific cocktail of concerns came together to create such a massive morning plunge? Well, it wasn't just one thing. It was this whole mix of factors that pushed the feeling from just cautious to, well, outright bearish. Let's break down exactly what was on every investor's mind. Now, what's really interesting here is how all these fears started feeding into each other. First, you had this huge cloud of uncertainty around U.S. tariff policy. That created what we call a prolonged policy overhang. Basically, the market was just stuck waiting. And if there's one thing markets absolutely hate, it's uncertainty. On top of that, you had some geopolitical stuff simmering around the world, making everyone cautious. And back home, the India VIX, which you can think of as the fear index, was spiking, signaling that people were expecting a ton of volatility. And to top it all off, you could see the smart money was leaving. Heavy, consistent selling from foreign funds. It was literally a perfect storm of negativity. And here's the real-world impact of all that fear. We saw the benchmark Sensex just tumble more than 700 points down from its last close. And the Nifty 50, which is a huge psychological level, it broke below 25,500. For anyone watching their screen, it was just a sea of red. That downward momentum felt pretty much unstoppable. Okay, so this chart tells a tale of two completely different mindsets. On one side, you've got the foreign institutional investors, the FIIs. They kept on selling, getting rid of a net of over 3,600 crore rupees worth of shares. But then look at the other side, our domestic institutional investors. We're talking our local funds, insurance companies. They saw all that panic and thought, hey, buying opportunity. They were net buyers to the tune of over 5,800 crore rupees. So they were absorbing all that foreign selling and then some. This tug of war was happening right at the market's lowest point. And then it happened. Right smack in the middle of the trading day, with the market bleeding out and sentiment at rock bottom, the entire story just flipped. In an instant. It wasn't an earnings report, it wasn't a central bank announcement, it was a single diplomatic statement that completely reversed the market's direction. This right here, this was the spark. These words from the new U.S. ambassador, Sergio Gore, were exactly what the market was desperate to hear. Now, it didn't confirm a deal was done, but it did something almost as important. It replaced that crippling uncertainty with a clear sign of progress, the confirmation that a call was happening tomorrow. That was a real, tangible piece of good news in a total vacuum of fear. The market, which was priced for the absolute worst, immediately started to rethink everything. What happened next was just astonishing. I mean, the market performed a textbook V-shaped recovery. The sellers just vanished, and all the buyers who'd been sitting on the sidelines rushed in, triggering this frantic rally. Let's take a look at the sheer scale of this turnaround. From its lowest point of the day, the Sensex staged this massive rebound of over 1,000 points just to close in the green. Think about that. A swing of over 1,000 points in just a few hours. And the Nifty, which looked so weak below 25,500, it rallied hard, took back that level, and kept on pushing higher. This wasn't some slow grind up. As you can see from this V-shape, it was an explosive reversal. And here are the final numbers. After all that drama, the Sensex ended the day up 302 points, and the Nifty closed almost 107 points higher. If you'd only looked at the closing bell, you'd have thought it was a pretty moderately positive, almost boring day. But those numbers hide the incredible chaos and the wild journey from deep panic to total relief. But the recovery wasn't the same for everyone, which tells another part of the story. Stocks that are really sensitive to economic growth and trade, like Tata Steel and Asian Paints, they led the charge, jumping around 3%. But on the other hand, some stocks, like Infosys and Bajaj Finance, still finished the day in the red. This just shows that while the positive headline lifted the whole market, there were still sector-specific concerns, and maybe some nerves about earnings reports that kept some names under pressure.
So what happened after the closing bell? Well, this post-market snapshot gives us some clues about where sentiment was heading. Nifty futures were trading at a premium, which basically suggests traders were betting that this upward momentum was going to continue. The overall market cap recovered to 466 lakh crores, clawing back some of those earlier losses. And the currency futures show the rupee was holding steady. All signs were pointing towards that optimism carrying over into the next day.
A day like this is so much more than just a wild ride. It's a powerful lesson, right? It forces us to ask some tough questions about how we react to news and to volatility. So the crucial point is, what can we actually learn from this 1,000-point swing to become smarter investors? First, and this is the most important one, we have to learn to tell the difference between a changing narrative and changing fundamentals. The financial health of the companies on the index didn't change at all between morning and afternoon, but the story being told about them sure did. Second, the recovery wasn't a case of a rising tide lifts all boats. As we saw, there was selective leadership, which is a good reminder to pick your stocks carefully. And finally, wow, this day was a masterclass in patience. Panicking and selling at the bottom would have been a devastatingly emotional and expensive mistake. Perspective is just everything. And that leaves us with this final critical question. Today's entire swing was driven by headlines, first by the noise of fear, then by the noise of hope. As investors, our biggest challenge is always filtering out that short-term noise to focus on the long-term signal. It's really the difference between reacting to the market and actually investing in it. Something to think about.